Hello and welcome to MasterChartsTrading.com market recap for Friday, July 17th, 2015. This week S&P 500 closed just shy of all-time highs, while the technology sectors QQQ, FD, and NextBI actually closed at all-time highs and all-time closing highs. The semiconductor ETF has a little bit of catching up to do. Bonds held support for the third time this week. Also not listed here, but the dollar broke out above recent highs, so I think we may see more strengthened dollar, and this is weighing strongly, especially on various precious metals and various commodity-related ETFs. And we'll also look at the agricultural commodities, and I think their breakouts may have already failed. All right, let's look at the S&P 500 large cap index. So last week we closed below the 200-day moving average for 2 times in a row, and this was not usually not a very good sign, as many people would just sell below the 200-day moving average, and they would consider a security which is trading below the 200-day moving average to be bearish. I personally don't think so, but in any case, we had a strong rally all this week and closed basically very close to all-time highs. As far as market breadth, we're still seeing a little bit of low volume on the upside. I would like to see this indicator on balance volume to make a new high. It has not yet made a new high here either. It made a high here, but you can see that there's a divergence here that's going on. So I would like to see more volume on the upside, but for now it is looking very strong. Same goes for advanced decline line. I'd like to see a close above 3011. So, but we're pretty close here. So I'm guessing that if we see any more upside, we'll probably work these divergences off as well. So last week we had a breadth thrust and an immediate strong gain. So I mean, this just shows how resilient this bull market is. In the high-tech universe, QQQ, the Nasdaq 100 ETF, made a new all-time closing high. Also, very strong run this week as well. I think this is certainly due to large tech companies, having breakouts and with such a strong charts for QQQ and for Google especially. There was a big breakout. Amazon, Netflix, eBay, all are heavily weighted in the QQQ. So again, since we're seeing more strength in the large cap and the major components of QQQ, I would like to see the advanced decline line catch up to the rest of catch up to the large caps, because this is a heavily what do you call it, market cap weighted. So I'd like to see advanced decline line go above the 307 here, so that we'll work off this divergence. But definitely a strong chart as well. Same thing with on balance volume. I would like to see more upside volume for QQQ as well. Otherwise, these divergences, they could eventually mean that we'll roll over. Hasn't happened yet. Of course, like I said, the strength was very prominent in the Internet index, and you can see the FDN First Trust Internet ETF made an all-time closing high and all-time high as well. And like I said, Amazon, Facebook, and Google, and they're heavily weighted in this ETF, so it's one of the leaders as well. Next one I want to show. the Biotech ETF, and I prefer XBI to IBB because XBI I think is a lot more diversified than IBB. IBB is heavily weighted towards larger cap like Celgene and Biogen, etc. Now XBI is basically equal weight, and this shows just a very broad strength in the biotech universe as a new all-time high was made just on Friday, just this Friday. So this shows a strong appetite for risk, and a very biotech is just a very strong security. You can see the StockCharts technical rank; it was above 90 for quite a long time. Nice buying opportunity here in May too. Now, one sector I think that's weighing on the technology sector is semiconductors ETF. You can see it got really hit pretty hard. You can see that it lost as much as 13% in just a few weeks here. So I would like to see a rebound in semiconductors. This way, I think the breadth of the QQQ will catch up with the large cap, heavily weighted ones in the NASDAQ ETF as well, because semiconductors are obviously under pressure here. Okay, that's all I want to say about this. Next is bonds. Let me just turn off this rollover. Excuse me. So bonds, TLT, 20+ year Treasury bond fund, held support in this critical support area at around 115, 114 and a half, and it looks like it held it for the third time this week as well, and then rebounded. And even on Friday, it managed to close above the 50-day moving average. So that's a positive sign. Now, you can see that here 50-day moving average is below the 200-day moving average. So that's some people call this the death cross. In other words, this is like one of the signs that the security has entered a bear market. Now, I think it's very close to a bear market. In other words, if there's a bear market, I will be looking for shorting opportunities within this security. But I look at some other charts as well, and I don't think yet that it is in a bear market. If or when this support level at 114.5 is broken, I think then I will be ready to say, okay, absolutely, TLT is in a bear market, and we'll be reversing our thinking and start looking for shorting opportunities. Excuse me. For now, I think it's still just barely bullish, but just barely. And I think this rally this week, so this is pretty significant. It's like a 2.5% rally right there in bonds. So I think this is due to Greek crisis and all that. Now, once again, there's now tons of overhead resistance. There is resistance here in the 120 area, resistance here at 123.5 with a 200-day moving average and these two peaks. So there's tons of resistance. Where it will fail and whether or not it will fail, it's hard to say, but at this point I still have a little bit of a position. I have a position open in TLT, just a small position to play in case of some kind of maybe geopolitical event of some sort. Maybe something happens in Greece again. Next, let's look at the dollar index. Okay, so this is the United States dollar index end of day chart. So number one, we had a breakout here on Friday and a close above resistance level from late May. So this could be like a cup and handle situation right here, and if this is indeed a cup and handle situation, then we should be looking for a move that's equal to this height right here. So that would put this index somewhere around the peaks from March. And I think this is very much possible because this is a bullish security, and right now pretty much all of the other currencies are moving down against the dollar. So this is a very much a possibility. And if this does happen, this will further weigh on commodities. And next we'll look at gold. Well, gold just had a really bad week for several reasons. First of all, it broke support here, and this is this low here that was put in at 1129.60 is in fact a 5-year low for gold. Now it rebounded by the end of the day and closed just off the lows of the 5-year lows. But I think you get the picture. Basically, whenever a security hits a 52-week low, or in this case a 5-year low, this is not a good sign, and usually more of those 52-week lows will follow. Sometimes there's rebounds, small rebounds, but the gist of it is this is a bearish security, and more downside is definitely likely. Here you can see a MACD indicator. You can see it's not even that terribly oversold. It's right now at -10. Here it was at -20. So what I'm trying to say is there is still room for this particular leg down to run to the downside. And yeah, so bearish security gold very weak and staying weak as well. Next is GDX, gold market, market vectors gold miners ETF. It is even weaker than gold itself. It actually closed at an all-time low, all-time closing low. There was back, I believe, oh gosh, however many years back, there was it was not a closing low. So this is an all-time closing low. This is a very weak security as well. You can see the advanced decline line right here is you can see -3686. Here it was minus. Right here it already broke below this level, and we're still right here. In other words, the advanced decline line was like a leading indicator, and I actually highlighted this fact last week, and after that we collapsed even further. You can see right now we're hitting all-time lows for advanced decline lines, etc. Now I think this is a gold miners bullish percent index. It's right now at 3.33%. So in other words, I think there is one stock out of the entire index that's actually on a buy signal. So this kind of shows that the selling may be coming to some sort of a climax. So let me zoom out a little bit so I show you what I mean. So here, gold miners bullish percent index, you can see that, let me see, in November of last year, we hit, well, first of all, here's the low from last year, from November of last year, and we clearly closed below it. So that's not a good sign. But for bullish percent index, you can see here it was basically at zero. So none of the stocks in the index were on a buy signal. And then afterwards, we had a pretty nice rally afterwards. Same here, you can see it was a zero in December, and then we had a pretty strong rally as well. So what I'm trying to say is I think that right now the bullish percent index is at basically almost at zero. So I think we're approaching some sort of a climax, and a short covering rally may ensue anytime soon. I still have a position open in dust that I opened, I believe, right there, and this is a triple inverse ETF dust. So we're about 100% up actually for this move. Now, that's a very unusual move, but it does happen. So it just shows that it's, in my opinion, better to go with the trend. I mean, look at this move, and then a relatively small rebound compared to this down move. Yeah, so like I said, I think we may not be done yet, because you can see that same thing for MACD. It's not that oversold. It's a minus 0.75, but here it was even lower, and here it was even lower. So there is more room to run to the downside, I think. Just to highlight a couple, one stock that's part of the GDX is Barrick Gold, one of the bigger gold producers. This is a 24-year low. So this is going back to October 1991. So yeah, this just shows that a very, very weak security and gold in general, and gold producers as well. And finally, let's look at some. I don't normally trade this, but I do look at them just to get a feel for the market as well. So this is a grain sub-index, and this is composed of equal parts, I believe, of wheat, corn, and soybeans that the fund holds as futures. So it looks like we had a breakout right here in end of June. It was a really strong move right there. This is pretty powerful move. But I always, this is a bearish security. You can see the prices are moving down, and then this is a breakout right here. So I was wondering myself, how will this breakout hold? For now, I'm treating this security still as bearish, and I'm looking for shorting opportunities. You can see MACD is already positive. It was very positive here and quite, overbought, and we got our short signal right there. So we'll see if this short signal works out. I think because I looked at some of the other grains and various soft commodities, agricultural commodities ETF, they look very similar, and looks like they're collapsing as well back down. So we may see a move back down, especially if the dollar holds up as well. All right, that's it for this week. Please visit us online at MasterChartsTrading.com and sign up for our mailing list, subscribe to our mailing list. We're hopefully one of those days we'll start a trade alert service, and if you sign up, you'll be the first ones to get a best pricing for that service. We have a blog, and this information will be posted there as well. Video section and the public charts page and social page. To find the charts that are mentioned in this video, please go to this public charts page and click on this link. Like I said, sign up for our mailing list, and if you have any of the social media accounts, Twitter, Facebook, YouTube, or StockTwits, we are there as well. That's it for this week's recap. Thanks for watching, and have another great trading week. Bye-bye.